and he's always there to share his knowledge and all. And we are also very lucky to have Mr. Bala. About Mr. Bala, he has worked with a company like Coseco for almost 30 years. So, and in 30 years, he has virtually handled everything, legal, accounts, finance, so he has a rich experience, of handling, 360-degree corporate functions. So, welcome Mr. Bala as our regular panelist. And today, we have young, energetic Mr. Alok Mishra. He's also a company secretary. Of course, he aged 45, and he's a law graduate and a company secretary, and he's also done ICMA. He's associated of ICMA, and he's also done a diploma in finance from the ICFAI 5, that is Chartered Finance Institutions. Now, about Alok, he is very uniquely placed. Now, currently, he is working in a company called JSW. Now, JSW is one of the very fastest moving group. And, I think all of us, we know that they have acquired this company called Bhushan Power and Steel. And Alok is also involved into that, activities. And now currently is a company secretary and compliance officer of the Bhushan Power and Steel Limited. And before that, he has worked with a very great company like Go Airlines, ISS, and I know he has worked with a company called Mahanagar Gas also. I understand he has handled the IPOs of a Mahanagar Gas Limited, which is a one-time, lifetime experience, And the best thing about the Alok, he was also part of the team from JSW, where they have issued the NCDs, transactions. He has handled transactions of 15,000 crores, which is something, a very few company secretary can have those kind of
great.
experience. So welcome Alok ji in our webinars. And we also have another faculty, Mohini.
Good morning, everyone.
Hi. So we welcome you, madam, to this webinars. Now, Mehta Mehta, we are just having this webinars, for almost a year now, and we have not missed out, any of the Saturday except those holidays. So about the Mohini, she is a Master of Commerce and also a member of our company secretary institute, for more than 17 years, and she is, currently heading the ESOP and SEBI insider law compliance divisions of the group. And she is an expert in providing the end-to-end solution for all kind of a share-based employee benefits plan, along with the in-depth advisory, opinion, educational, and technical. Of course, he has taken those technical session also for the board and the other employees, on the insider law matters also. Now, she is handling currently more than 150 clients, which are listed and non-listed, and some of them, they are also a startup. And earlier, she was handling the security laws, and she was has handled more of a, many restructuring, and she has handled a lot of complex restructuring also. And she is also currently instrumental in developing a web-based application on ESOP, Guardian, which is more of a ESOP, online services. Now, she is also handling the another web-based product, on a SEBI prohibition insider trading software called how do you spell this, Mohini?
It's an Intellisis, and it's a structured digital database, which is the foremost first main requirement of every listed company nowadays.
So great, So welcome you, madam, to this webinars, and now probably so now without taking much time, and also of course the presenter, our young company secretary Garima Trivedi. Now she is part of our Mehta Mehta, and she comes with experience of 4 years in Mehta Mehta, and she is part of our team and very young and energetic. So Garima, okay. But before I request Garima to start, Mr. Bala, can you wanted to say something?
Yeah. When we talk about the ESOP, so I being a older timer, I will definitely remember. Even Shailesh Bhai also will remember. We used to have a concept called qualification share for the directors. The whole idea of having the qualification share for the director is actually make them as the owners of the company and feel that they are actually belonging to the company, they are having a ownership of the company, you take much of an interest in the company. That was the concept. As the law progressed, the qualification share has been actually done away with. Of course, some of the companies now they are having a share qualification share if they want to, but mandatorily it is not like that. But down the line, the concept of ownership has developed to the employees. That is where the ESOP is. What happens when the new startup companies comes, they are not able to pay that much salary because their revenue, etc., and other things and all, they are just in the gestation period. But with the result, what happens is they are not able to attract the talent. So they would like to attract the talent, they would like to retain the talent, they would like to have a efficient operational things in the organization. With the result, the startup is now moving towards one of the ways of putting the remuneration structure as a ESOP. So what they do is with the ESOP is actually designed, it has got a number of periods. There's a period of vesting, there's a period of exercising, and other things are all. So initial stages, these are all offered to them. So as the company progresses, then they start not only giving the remuneration, but also ESOP comes. That is one of the way of attracting the talent, retaining the talent. It works in both the ways. One way, employee get a benefit in the long term. It gives a ownership feeling, and they are also take much of an interest, and it motivates to the greater extent. And similarly, employer, they also feel proud to attract the talent and retain the people, and they can move forward. It is both the way, win-win situation is there. So today, our presenter is going to talk about the ESOP concept, the various procedural aspects. So she will also take up some of the companies where ESOP has been done, especially the startup companies, etc. Before that, I would like to ask Alok and Mohini to share on the topic about few lines before we start. Alok, please.
Yeah, Alok ji. Yeah.
Thank you so much, Balaji. At the outset, I should thanks to Mehta and Mehta, especially Atul Mehta ji and team for giving me this opportunity. It's a pride and privilege for me to be in this forum, knowledge sharing forum. I mean, for me, this I'll just brief about the ESOP. ESOP is just like, ESOP implies stock options. So stock options is representing a reward system. It's based on the performance generally, and it helps companies to attract, retain, and motivate the best talented employees. I would say, this is one of the parameters by which generally organizations try to retain the key employees of their. Stock options also have a long way in aligning the interest of the employees with that of the organizations. Basically the intention is that employees continue for a very long duration, and that obviously in the interest of the organizations also, and providing employees an opportunity to participate in the growth of the companies, because in a longer duration, definitely when the company's growth accordingly, employees also remunerated well accordingly, and creating a long-term wealth in the hands of the employees, the key persons who are associated with the company for very long duration. So this is basically, that is the main intent, and they need not require to pay salary up to a high salary. Obviously, it is a long-term creator for the employees. So as a global business environment, it is becoming increasingly competitive, and it is important to attract and retain qualified, talented, and competent senior and middle management personnel in the company. Generally, it is therefore necessary to formulate a fresh plan whenever it is required. Company make a fresh plan and continue it for few years, maybe 3 years, 5 years, or 2 years, depending on the requirement. And it's mainly capture the senior middle management employees and attract to strengthen and the ownership amongst them, because generally if you are having the shares, then you are having the ownership, having the belongingness with the organization, take the responsibility, additional responsibility for the organization, and opportunity for the wealth creation. Definitely, I told you. So these are the major things for which generally ESOP has been created. And for longer duration, for the employees perspective as well as the organization perspective, both are associated. That is major advantage for the ESOP. So this is the major reason, objective for which generally companies formulate ESOP plans. Obviously, I mean, generally this scheme, whatever the schemes are there, this is
Can somebody
approved by
switch up the mic?
the
Some
board, and
cross talk
obviously
is happening.
we take the approval from the shareholders, and all those I mean, how the scheme has been implemented, how it will be procedure. I think that we will be covering in the presentation that Garima will be covering here. So with this brief background, I think we can initiate. Thank you, sir.
Over to Mohini, please.
Good morning, everyone.
Morning.
So, why the ESOPs are necessary and why it become a part of a compensation nowadays? It's not restricted only now to a listed company where the exit opportunities are all time available for the employees. It become a very essential part in the compensation package in the unlisted companies as well. If you look forward in the startup world, so it's more common in the startup rather than in the listed company where the exits are very easily available. And through the recent trend, we can even check that every startup which is getting the funding, they all have their ESOP pool, and it's not distributed only to the founders, to the main KMPs. They are distributing it to a very good number of employees there. The reason for being is that not only that why that they can't pay more in cash, but the important reason is because they want to cultivate from the very beginning in the employees a belongingness about the for the company. And also the founders, today's founders have a very great belief that when they are making when their wealth is increasing, they also want their employees to grow with them. So this is the reason why the ESOPs are becoming a very common practice, a very common a part of a CTC or the offers in the startup world. Following the same in the listed companies also, as the companies are growing, the share prices are growing, and also now the promoters are feeling in the listed companies as well a need for having the ESOP. So now when we talk about the promoters of the listed companies, so then now the KMPs like CFO, MDs, professional MDs, the CEO, CXOs of the listed companies as well, and even if we go talk about the company, the two level below the KMP position, all the peoples are now being remunerated in the form of an ESOPs. So, so the ESOPs has now become a very, we can say that it's a kind of a part of a remuneration which are being given to the employees of the company. So if a little bit talk about the recent trends. So in the recent trend, if we talk about, so in the unlisted world, also the many companies like Paytm now it's a listed, but before listing and after listing, they have chat, off business, Go Mechanic, Chayos, all they have recently increased their ESOP pool. So we can think of that why the ESOPs are important in these companies. Also to understand the in the ESOP thing, that ESOP becomes is useful only when it get the liquidated in the hands of employee in the certain manner. That means ki if in an listed company like ESOPs are being given and employees have a very clear exit route ki yes, okay, when I get the ESOPs, I get the exit from the market. But in the unlisted company, why it is gaining importance? How the companies are giving the exit. So yes, the exit routes are also available in the unlisted companies. So recently, if you go about FarEye, Udan, ShareChat, Razorpay, Cred, Wakefit, and recently in the very new startups, all have given the exits to their employees. So now from by mentioning and by covering these kinds of trend, I only want to make a notice here that the ESOP adoption nowadays have become a part of the compensation, and it's a very good type of remuneration. It's a kind of the belongingness you can create in the company, as well as the employee grow, a company grows, sorry, and the employee's wealth also increases. And the main important thing is that by giving an ESOP, you're sharing the complete wealth of the company. That means the teamwork is important, because it's not my effort only I'm getting remunerated. It's the complete organization's teamwork, which I am getting in the form of the wealth creation with the increase in the value of the equity in the company. So how these to be given, and what the practices you need to follow, and what all the things are, Garima in the presentation is going to cover those things. Thank you.
So I add one more thing when you said about the wealth creation. 25 years back, I met a middle management person from Castrol, India. So when I was talking to him, he was actually retiring. He told me that I have made arrangement to buy a house, which I am going to name as Castrol House, because the entire money which I am getting is from the shares which are accumulated in the Castrol over the period of years, by which is enabling me to buy a house. Those days, buying a house was actually a very great dream. It was not that easy those days. Even the norms of getting the loan, etc., Shailesh Bhai, Atul also will recall it. It is very difficult. Eligibility limit, surety, guarantee, this, that, etc., and all those things were there. Today, comparatively, which has become easier. But 25 years back, the gentleman told, because of the employee stock option which has been granted to me in the Castrol over a period of years, I am actually able to buy a house, which I am going to name it as a Castrol House. This was the retirement long-term benefit, which I touched upon in the beginning. Even Mohini says that. So that is making a trend nowadays. Let us go into the details so that we will know the nitty-gritties and the procedural aspects, etc., and other things. Over to Garima.
Good morning, everyone. So our topic for today is ESOP and the managerial remuneration and the tax implications of ESOPs. As the panelists have already rightly pointed out what ESOP is, ESOP refers to the plan for the benefit of the employees, not just in short term, but also in long term. ESOP is not only limited to bigger companies, but these days it is also gaining popularity amongst the smaller companies or the startup companies. ESOP plan has become famous and appreciated over the time because of the benefits and recognition that it gives to the employees. So it is not only about the growth of the company, it is also about the growth of its employees simultaneously today. ESOP also enables an employee to create wealth as the company grows. One of the earliest examples of ESOP was the company Infosys. It was one of the earliest companies to introduce the concept of ESOPs. Now, as we all know, ESOPs is governed by the Companies Act and the Income Tax Act when it comes to all of the companies. However, in case of listed entities, it will also be governed by the SEBI regulations. The panelists have rightly pointed out that the purpose of ESOP is to motivate the employees for the purpose of growth and profitability of the company. The other aspects of ESOP are also to provide incentive for the purpose of attracting the best talent, to retain those employees, and to reward those employees of the company. It is an additional wealth creation for the employees. Now we shall see we can see a small presentation on how Nykaa had provided ESOPs to its employees.
कहीं पे स्टेबल होके काम करने का आखिर क्या फायदा होता है? ये मुझसे नहीं, नायका के उन एम्प्लॉय से पूछिए जिनको 850 करोड़ मिल रहे हैं। बिल्कुल सही सुना, 850 करोड़। वो कंपनी में स्टार्टिंग से थे और अभी भी हैं, और उनको ये फायदा हुआ है ESOPs के थ्रू, एम्प्लॉय स्टॉक ऑप्शंस के थ्रू, जो कि कंपनी देती है अपने लॉयल एम्प्लॉयज। नायका के इस आने वाले IPO में नायका रेज कर रही है 5324 करोड़, और इसी का फायदा मिल रहा है उसके एम्प्लॉयज को। इन एम्प्लॉयज की लिस्ट विथ नेम और विथ ESOP की वैल्यू आप अभी कहीं पे स्टेबल होके काम करने का आखिर क्या फायदा होता है? ये मुझसे नहीं, नायका के उन एम्प्लॉय से पूछिए जिनको 850 करोड़ मिल रहे हैं। बिल्कुल सही सुना, 850 करोड़। वो कंपनी में स्टार्टिंग से थे और अभी भी हैं, और उनको ये फायदा हुआ है ESOPs के थ्रू, एम्प्लॉय स्टॉक ऑप्शंस के थ्रू, जो कि कंपनी देती है अपने लॉयल एम्प्लॉयज। नायका के इस आने वाले IPO में नायका रेज कर रही है 5324 करोड़, और इसी का फायदा मिल रहा है उसके एम्प्लॉयज को। इन एम्प्लॉयज की लिस्ट विथ नेम और विथ
Here, so we can also see the names of the employees who were granted ESOPs before the company came in for listing. As you can see, Miss Reena Chhabra, who is the CEO, was given ESOPs worth 250 crores. Similarly, Mr. Nihir Parekh, who is also the CEO, was given ESOPs worth 245 crores. So you can see here, even though the company is not able to pay in, since the companies are small at the time, even though they're not able to pay in cash, but in the way of ESOP, they've created so much of wealth for these employees. Ma'am, what are your thoughts on this, Ms. Mohini?
Yeah, definitely. So when they have started, they are very small, and the journey when the NICA has started, and even on the same ground, if we look forward for the ESOPs in the Paytm, similarly in the delivery. So all these companies at a very nascent, when they are at a very nascent stage, they have given the distributing the ESOPs to their employees. At that time, the value of the ESOPs when they are giving, the company value is very low. Now, if you multiply with the, as they have grown, as they have grown, and as what the valuation at the time of listing was of that company was. So there is a huge difference. For example, they have given it a very notional, for example, we can take it at a par value even. So now when they have got the listing at 1,000 or 1,200 or 1,500 or so, so you can see a huge difference in that. So it's, if you talk about their otherwise remuneration, that's very low, in whatever in the form of a cash or any other purpose that they are getting. But ultimately the equity value, it's the equity worth of they have with multiplied by the by the value which the company got the time of the listing, is definitely a huge gap. So it's the journey that how the company has grown up, and like the founders have grown up and created their wealth through this, their employees have also done the same thing.
So hats off to Falguni Nair, because not only it talks of the success of the company, but it also actually proves what you call the women empowerment and women entrepreneurship. The great thing, my hats off to her. Not only that, on behalf of all the women, I definitely hats off. I wish every woman in our country should get actually enrich themselves by looking at inspiring these people.
Actually, sir, we were involved. Mehta Mehta, we were involved with the NICAs, pre-IPOs, all activities.
Yes, I know.
Sir, 1 rupee shares, they've issued at 1,000 rupees, and the share got listed at 2,000 rupees, sir, 2,000 rupees. So
Correct.
that was the kind of a wealth, she has created. And there were many articles in the newspaper about, comparing, the promoters with, Mukesh Ambani, stating that, she just created a wealth in 7 years, where, Ambani family took so many years to create those kind of wealth. But amazing. And see how, the promoters, she was not from a technical background, but she was a merchant banker. And how she, utilized those ideas and converted, into a kind of a company, and, the e-platform, and see how, they made a minted money. And of course, this was an IT company. So you can see the CTO, Sanjay Suri, got, 200 plus kind of a ESOP, and I've worked with Mr. Arvind Agarwal. Now he just joined one year before the IPO, and see, he got such a great kind of a ESOP. So now this is a very classic example. And sir, nowadays what is happening? Retaining people is a big challenge, because nowadays you have so many platforms like Naukri.com, and the people get lifted, like this. So now this is a one way, good way of retaining people, and yeah, you are also sharing a wealth, with them once the company grows with it.
Ask me, Silent Boy, how many years of service you have put in Tata's?
Tata's 26, but generally in other places totally about 38, 40 maybe.
See.
But Bala, I have something to say. I have something to say from my Tata experience.
Yeah.
It is indeed great that such large amount of ESOPs have been granted. However, if we were to really reward the persons for bringing the company to where it is, like for example, in the case of TCS, when TCS made its public issue, when it went public, it was accompanied by a ESPS, the shares given to the employees at rupee 1 per share. Now, in the case of ESOP, the ESOPs come with ifs and buts, that you have to hold the ESOPs for 3 years. Yeah, you should not change your company. You should not do anything wrong. So it's not a full control over the shares. There are conditions. As against this, for persons who have really brought the company to a very high level from its starting point. Say persons who have worked in the company in TCS for about 20 years before it went public, they were given ESPS, Employee Share Purchase Scheme. They were immediately allowed to purchase the scheme, the shares for 1 rupee. And they became owners of the share. They could leave the company, not the next day, but they could leave whenever they want. They were not tied in by anything. So I think to reward very competent employees and very loyal employees, ESPS would be a more proper thing than ESOP. ESOP could be to the junior persons whom you want to hold back, and they will remain in the company. ESPS can be by way of gratitude for having brought the company to where it is.
Yeah, so to add in this, yeah, Shailesh sir is very much correct that ESPS or the employee stock purchase is a one-time kind of an activity through which you are giving the equity to your employees at a very high discounted price. For example, if it's in 100 rupee, you can even give it at a very notional at 10 rupee. So that is for the work already done by the employees. That's a kind of a gratitude or things already done by the employees. ESOPs are basically being given for the future work. That means to retain that people. It's not the reward for the past. It's for the future motivation, future retention.
Right. Therefore,
this
Mohini,
is the main difference between the ESPS and the basically the ESOPs are, because in the new these startups we are not aware of, because all these CTOs, CFOs are being kept for a very specific purpose. So whether that purpose will be completed or not, and then they will be rewarded. So that's why the reason, sir, I think the ESOPs are gaining very much importance in these.
But I feel that the names which have been given here would have been instrumental in bringing the company to where it is. I don't know, but in the case of TCS, it was very much so. For example, I did not get any ESPS because I had joined TCS only 6 months before the issue. But the persons who were there for about 15 years, 18 years, according to the number of years that they were there, they were granted ESPS. There were no strings attached. If they were given at the face value of ₹1, when the issue was, I think, something like 720 or 3, I don't know what the price was. They were issued at ₹1 and no strings attached. So these 5 persons who must have been responsible for bringing the company to where it is could have instead been given ESPS, at least the first one. First 3. Maybe the other 2 could have joined, as Bala said, just before the IPO.
You are right, actually, Shailesh. But the thing is, what happens is, as you rightly say, ESPS is actually goes for the number of years of service they have put in the service, is the reward which is coming from already the company gaining the advantages from the employees. But whereas the ESOP is actually, we are recruited today, we would like to retain him. He is the best talented person. That is why if we see the vesting period, it is always there. Once the ESOP is actually granted to you, there is a vesting period. You cannot exercise your option until that period expires. Maybe 1 year normally, it can be more also. So once that expires only, it is there. That means it is actually binding for them to stay with the company. That is the intention, because the whole idea is, if you see in the first slide, they put actually, not only attract the people, talented people, but also retain them. And after the period of certain retainment, they are rewarded. That is the policy.
I entirely agree. For newcomers or those with 3-4 years of service, no doubt it has to be ESOP. But for veterans, for those who have already contributed.
In fact, for your information, there are certain companies who has also introduced only ESPS. I think Garima will be touching upon the end of the slide. I think so. There are already there are companies who has got only ESPS. There are already companies who are in ESOP. There are already companies who are also having some restricted share purchase unit. There are certain companies which are actually saving stake right appreciation. There are different schemes. Different companies have introduced according to that. That is there. It is not companies are not going for ESPS, but selectively there are certain companies are already doing that. Your concern.
I think TCS is only in ESPS. I don't think they've done an ESOP afterwards. I'm not sure.
Okay.
I'm talking about.
Yes, sir. Now even TCS don't have the ESOP at present.
They don't have. They had only ESPS and they stopped at that. Tatas have been very slow on ESOPs. Only some 5 or 6 companies in the group have ESOPs.
Yeah, Garima, you can continue.
Okay. Okay, sir. So before we proceed, it is important to understand the basic terminologies that are used in the process of ESOP. So what does grant mean? Grant means when the company issues options to the eligible employees. Vest, the other term is vesting. Vesting refers to when the eligible employees become eligible for the benefit of grant made to them. Exercise of an option. Exercise refers to an application that is made by the employee to the company for the purpose of exercising their own shares. Options. Options refers to the option that is given to the employees, that is a right to purchase or subscribe the shares at a future date. Vesting period. Vesting period means the period during which the options granted need to vest. This period shall be a minimum period of 1 year.
So
Now the
now
life
this,
cycle.
just one sec. So I cannot have any kind of the options, given to an employee where I can say, look, I can give you after 6 months. So it has to be minimum 1 year. So that's what, the requirement is. Yeah.
Okay. So the life cycle of ESOP begins with the approval of the scheme of ESOP. Then the company grants those ESOP. Then the company vests those. Then the options are vested. The minimum period between granting and vesting has to be a period of 1 year, as mentioned. Then the company, then the options will be exercised by the employees. The period between them is known as the exercise period. Further, the employees can either hold the shares or sell the shares.
Yeah, after the exercise option, you get the share allotted.
Yes,
the
sir.
process
Allotted.
of holding it or selling it there. Yeah.
Yes, sir. Now, I just mentioned about the eligible employees of the company. So who are the eligible employees of the company? An eligible employee can be a permanent employee of the company who has been working in India or outside India. He can be a director of the company, whether a whole-time director or not. These definitions also include the employees of the subsidiary company and the holding company. Now, the exclusions to this definition are the independent directors of the company, a person, an employee who is a promoter or belongs to the promoter group, or a director who either himself or along with his relatives hold more than 10% of the outstanding equity shares as on the date of grant of options. Ma'am, here I have a question for you. The panelists, here I have a question for you.
Yeah, sure.
Why do you think the ESOPs are not allotted to the independent directors of the company? I really believe that if the ESOPs were to be allotted to the independent directors also, wouldn't they be more involved in the company? Wouldn't they be more cautious about what is happening?
Yes, I agree with Garima because I'm also independent directors in a couple of companies. I sit in a board of directors, for 2 years, we have those board meetings. We really contribute, into those strategies of the company. Now, I also, like other employees, of course, employees are the implementer, more of an implementer. So as an independent directors, according to me, something should be given to them also, because the company cannot say, look, you just take those 1 lakh rupees, for attending the board meeting and all. So I think, I agree to Garima. Why not independent directors also?
Right. So ESOPs are given at a very discounted price. So I think the intention behind excluding the independent directors from there is that they have been appointed with a motive that they are independent. They can take the independent decision. And when you are offering something which is at a very less discounted price, then definitely some or other way their interest of independence get affected. If they really want to participate in the growth of the company, they are being allowed to have, they can hold 2% shares in the company. So you just go and purchase the shares from the market, and then from there you can increase your wealth. So it's not that that like an MD who is a professional MD, they are contributing in terms of their sweat and their time and efforts in the company like any other employee. So they are allowed. But if they are the promoters in the similar manner, you're not allowed to participate. So similarly to, it's not that independent directors independence get affected. I think that's why the reason the independent directors are excluded, and it's excluded from 2014 only. Earlier there is no such restriction on giving the ESOPs to the independent directors as well.
when the independent director definition undergone changes from time to time, probably they would have thought maybe by giving the ESOP to them, the independency may get affected because the self-belongingness comes, etc. Other thing and all. That could be the thought process. We do not know. But it is probably looking the independence may get affected. That seems to be the reason why it is put there.
Correct.
Because if you see the word, they should not have any pecuniary interest. Silent by, you will recall it, long time back when this concept was introduced, there was a debate in the market. I am actually becoming a director in the HLL company, but I am a user of Colgate. Can I be a director, independent director? To that extent, it was actually talked about it. I remember.
Correct.
You also would recall it.
And staying in Taj hotels for Tata directors.
Yeah. So these are all.
But there is,
Bala,
there's an important angle here, interesting angle.
Yeah.
Here, Garima has talked about independent directors.
Yeah.
Garima, what about nominee directors? The directors
I think
who are nominated. There's an interesting story.
Yes, sir. As per my understanding, there's a provision for that in SEBI SBEB regulation, which talks about regarding the shares to be granted to nominee directors. It will be as per the terms of the agreement entered.
Correct.
There is an interesting story here. In the case of Larsen and Toubro, they had the director, nominee director from LIC. And while allotting the shares, there was no restriction at that time. The shares were also given to that nominee director. Now, they are not really given to the nominee director. Those are given to LIC.
Shailesh sir, you are right.
And the man kept it to himself. And there was a big row over this, after which I think this regulation came that there is no ESOPs for nominee directors. LIC director was a nominee director on the board of Larsen and Toubro.
Okay.
I may add, the moment an independent director thinks that it is his right, then he loses his independence. And that is one of the clear reasons that probably ESOP should not be allowed for independent director, because if you go along the flow of the management or of the growth, it's not that it is not bad, but as long as you think and you are going to be only for a period during which you are supposed to do some other task, and ESOP should not be the focus. This is my personal feeling, and I think the moment you have a right, you lose independence.
There are certain questions have come in the chat box. After exercising, is there any waiting period for selling of the shares? It depends upon the scheme, according to me, because whatever the scheme is actually talked about, normally they may put a lock-in period. That minimum lock-in period should be this much, etc. So if that lock-in period is there, during the lock-in period you cannot sell. If lock-in period is not there, then it can be sold. This is up to the scheme what is formulated by the company. There's another question which is coming up. Is that employees of the associates are not covered? Yes, it can be. Associate company, subsidiary company, every company which is in the same group could be covered. There should not be a problem. Somebody has expressed the view on the independent director. There could be a conflict of interest if the independent director get the shot. And then ESOP can be a great mode of the employee benefit, but a lot of them hesitate to exercise ESOP due to the tax liability involved during the exercise. Can the panel share afterthoughts on this? Yeah, we are also discussing the tax implication on this. Later on, the slide is coming. Please wait for that till the presentation takes off. Yeah, that's all I think so for the time.
Here I have one point to add, sir. That in the associate company, so unlisted company cannot offer the ESOPs to the associate company's employees. But now in the listed companies, SEBI has allowed to grant the ESOPs to the associate companies and even the group companies. And a little bit variation in the definition as well. So in the unlisted companies, only the permanent employees can be given. But in case if it's an listed company, this permanent word also has been removed. So that means from the very first day, even the person on the probation period, they can be offered the ESOPs. So Garima, so these in the listed companies, along with the permanent, now the permanent word has been removed in the listed company space as well for all.
Okay, ma'am.
There's one more thing has been put here, the small explanation on the different methodology, direct subscription cash or via trust route. Which route is better? I think this is coming up. It is being discussed later in the slide, so we can wait for that. Restrictions on ownership, that is also being discussed here. What about the accounting of the discount amount in the company's book?
Shall I continue, sir?
Yeah.
Yes, sir. Okay. Ma'am, here I also have a question regarding the permanent employee that you just mentioned, because I was a company secretary of a listed company, and this is the problem I faced when we started with this. So when we say permanent employee of the company, the definition per se is not really described anywhere. So when you say permanent employee, who does it include? You mean an employee who has joined, maybe if he's on probation period, he's not a permanent employee of the company, or do we need to refer to the labor laws for the definition of permanent employees of the company?
It's a general definition of a permanent employee. A permanent employee means an employee with no ending date. That means the person earlier who are on the contract. For example, it's a 2-year contract if you have appointed them. So it's an end date. It's not a permanent. Generally, the permanent employees are that once you are appointed on the payroll, then when until and unless you resign or the company terminates you, your employment continues. So then you become a permanent.
You're absolutely right. Whenever you are employed, normally Shailesh Bhai also will recall it. An appointment letter is actually issued spelling of the terms and conditions, which also spell out on a particular age when you get superannuated. It may be 58 years, it may be 60 years, or whatever it is. It could be in some of the companies even beyond 60 years, it can be extended also. If such contract, which is there, assuring that you are going to be in the company as long as you are there, then that is a permanent employee. There are Can you put off your mic? Some crosstalk is happening. And second thing is there, some company they employ the people for the specified term. 2 years, 3 years, 4 years. What do you call project is going on? They are employing only for the period of 3 years.
They're on contract basis now.
Yeah, contract basis. So they are temporary employee. They are not permanent employees. And beside that, employees are also engaged through the contractual basis. That means we give a contract to the person. Actually, he comes, he works in the organization, but it is the employer responsibility to take care of everything in terms of, So what happens is in such a case, then he is also not a permanent employee. So that is where the permanent employee is there as such.
Okay, sir. Thank you so much.
Yeah.
Now moving ahead, the ESOP can be floated via 2 routes, that is the direct route and the trust route. In the direct route, the company grants option to the employees, then the vesting happens, then the exercise happens, where after post that the shares are allotted to the employees of the company, and this is it. And then the next process is the trust route. Under the trust route, a trust is established particularly for the process of ESOPs. Here, the company grants a loan to the trust for the purpose of acquiring the shares either from the company or from the secondary market. Post that, the company offers these shares to the employees of the company, and once the shares are exercised by the employees, the company there is a repayment of loan that happens via the trust to the company. Ma'am, regarding also these, usually the trust route happens is done for the purpose of non-dilution of the equity stake in the company. Ma'am, could you please point out some highlights on this?
Because the trust route, so trust route has its own pros and cons. And even it's to decide on whether to opt for the trust route or not, in the unlisted and listed companies, that's also a very different level. So first, if I take a very little highlight on the listed company space. So nowadays, if you check now, the many listed companies are going for the trust route. The advantage of having the trust route in the listed company is, the first thing is that if the company already have a very good float of capital in the market, so and they do not want to come out with the new shares in the market, then what they do in the trust route through secondary acquisition, that means from the purchase from the market, they channelize those shares to the employees. So at the first advantage that no new shares to be issued and the promoters are there as it is on the same percentage. and less dilution of the promoter stake as well. And the next advantage of in the listed company space in the trust route comes is because in the trust route, the cashless exercise is available. That means employees have not been able to arrange for the money for the exercise, then they can ask the trust to sell off those number of shares for which they are required to exercise those ESOPs. So they ask the trust to sell off those shares, and the remaining shares will be transferred. So the trust have this kind of an advantage in the listed space, which they in the things. In the unlisted space, the trust would have another advantage because in the unlisted space there is no per se market is there. So the companies can use the trust as a channel where the shares can be even bought back, and the same shares can be again channelized to the employees. And definitely, once the shares are in the with the employees have the employees become the shareholders, and every employee you need to connect for the selling of the shares and so the trust will also help you in strategizing these kinds of decisions in the unlisted space as well. So if the trust would have their own advantages and disadvantages in both the spaces.
Okay, ma'am. Thank you so much. Alok, sir, would you like to?
One question has come here actually. Can a contractor or consultant who work for the company be granted ESOP as per the amended SEBI and SC 2021 regulations?
No, contract consultants are not the employees.
No.
Please don't go away with the definition of employee. Consultants are never the employees. Is always be there. So consultants are not employees, so they can't be.
In the trust route, does the beneficial ownership remains with the trust? If so, how does the employee divest the ESOP shares?
In the ESOP, the shares are not being transferred to the employees. Before transferring it to employees, it will remain in the ownership of the trust. So there is no beneficial ownership of the, which you are talking about in the sense of the beneficial ownership as per the Companies Act. That's not the case. They are the trustees for the shares of the employees. Before it will be transferred formally in the name of the employee.
Can an employee grant a loan to an employee to purchase? Can a company grant a loan to the employee to purchase ESOP?
The company can arrange through the other vendors, the other financial institutions or maybe banks or so, but not directly. They can give the funding to the employees for sourcing their own shares.
So section 67 also allows, other than KMP, they can give up to 6 months of salary, the loan to the employees.
For purchase of shares, correct.
Yeah, that is there. Other than the KMP, the loan can be given, but there is a ceiling limit is there, which is subject to 6 months salary, not exceeding 6 months salary.
So that is very must.
Yeah. There is one more question is coming. The gentleman is asking, I am interested in knowing the extent of the company which can put a restriction on the exercising the option. For example, employee drawing below the or more than the salary will get the ESOP, or employees working more than certain number of years only can get ESOP. Yes. Employees holding shares of the company will not get ESOP, etc. See here, again, what happens is generally by going by what is happening in the industry, they recognize not the number of years, number of salary, etc. They recognize the level, senior management level, middle management level, lower management level. And normally the ESOP is given according to the management level. In some companies, it is given to all levels also. So much will depend upon what is the company wants to draw a scheme. Even these things also can be put up if the company wants to draw a scheme, because normally what happens, the scheme is actually proposed, it is get it approved by the shareholder, then it is put into the force. Yeah. That's all I think here. Yeah, you can go ahead, Garima.
Okay, sir. Now we look at the process for issue of.
Excuse me, in November 2021, there was a broadened definition, widened, and also in some discussion paper, there is a view to include this non-permanent employees. So still there is clarity which is definitely required on this, The SEBI circular on November 16th, I think, 2021.
That is what someone is referring actually. By referring that only, he is actually saying whether contractor or consultant can be given the ESOP. That is exactly the question.
Okay. Now we'll be looking at the process for issue of ESOP. Firstly, the company is required to hold a NRC meeting for the purpose of approving the ESOP scheme. Post that, the company is required to obtain the approval of the board for the approval of ESOP scheme. After that, the company is also required to obtain the approval of the shareholders for approving the same. Post that, the grant of ESOPs happen. Then there's a vesting period of 1 year. Then the employees can exercise their options, and post exercising, the allotment of share happens. The company is also required to file certain forms like MGT 14 and Pass 3 within a period of 30 days. And the entries are to be made in the register in SH 6. Now, if we see the listed entities, there will be certain additional disclosure requirements pursuant to SEBI LODR regulations. Ma'am, if I'm not wrong, the stock exchange information is required to be given while instituting the ESOP scheme and also at the time of exercise of options. Yeah.
So there are various stages in the ESOP. So first, when we are framing the scheme, so as per the so in the SEBI regulations, if you go, nothing has been mentioned that you need to inform to the SEBI or not, or exchanges or not. So now so the listed company has to read the LODR for that purpose. In the LODR, there is a regulation 29 where they have said ki if it's an issuance of shares, or in the regulation 30 that says an issuance of shares, so you have to inform to the exchanges. And similarly, ESOPs are a part of regulation 13, the material event, but it's in schedule B where it's not a mandatory item to be included as a material event. So if the company thinks it of that it's a material event, and material event at what stage? At the time of grant, at the time of vesting, at the time of exercise, then they have to. It's not on the mandatory item. The practice, the market practices, when they are coming out with an ESOP scheme as a good governance, and as well as it involves the sharing the shares with the employees, and it's an issuance of fresh capital. Generally, at the time of issuance, every company is informing that yes, we are coming out with the ESOPs. The second stage comes to the grant. Yes, at the time also the grant, generally the companies are informing. And after that, the companies are taking care of it at the time of allotment. But in between, because vestings are not certain, anytime the vesting can happen. Exercise, every time, all time exercise are open. So this is the reason why it's a practice, but you can decide in your material policy about it.
Okay. But the company wanted to be, totally take all the precautions. Tomorrow, no regulator point out to anything. So that is why they actually keep informing. That is a normal practice, as you rightly said it here. Again, it is depending upon the judgment of the company, what is material event, what is not material event. Because there is actually a policy used to be framed by the company for the disclosure of the material events. So they have to apply their mind, they have to do, but by and large, the companies are taking the very precaution. They don't want to take, any sort of the chances the regulator point his finger to them. Yeah.
Also, if I correctly remember, Schedule 5 Part A mentions about disclosures to be given in case of issuance of shares. So when the shares are issued, I think that would be required, right?
Issuance of shares at the time of when you are passing your scheme.
Yeah.
But that time the board has issued it. After that, it's an online allotment.
Yes.
Garima,
one more thing here. I think if trust is there and it is happening to the secondary market, then in case no further allotment will happen, and then the pass tree will not be required. However, in the entire scheme, we have to seek the approval from, in case of listed company, for the scheme, we have to take the in-principle approval from the stock exchanges. So that, I think it is coming somewhere. We can proceed.
Yeah, there is a question is also asked here. We need to seek the principle from stock exchange as well. Yeah, it is there because the ESOP is going to come. It is the listed company. It is going to be listed. So in principle approval for the listing will be a prerequisite. Yeah, that is coming up in the future slide. Yeah.
Garima.
Yes, sir.
Step number 5, which you have got, and which says we have to take board resolution for allotment of shares to the employees. would this also apply when you're going through a trust? Because the allotment, the shares are then given by the trust to the employees. Would it be valid for trusts also?
Hmm. I'll have to check on that.
Okay. Okay.
So for the allotment is there, but in case of a direct route, it is directly to the employees. But in case if it is a trust, allotment to the trust will happen, and then the trust will transfer the shares.
Correct. So when the allotment to trust is made, possibly there will be a board resolution because from company to the trust.
Correct.
But when trust gives to the employees, it is a transfer, not an allotment.
It's a simply transfer. It's a
It is
simply
a transfer and not an allotment. So I think I'm not too sure though. And
you are correct, sir. You are correct. In that case, Part 3 is filed at the time of allotment stage to trust. Because Garima has covered here the steps for a direct allotment process.
Direct, yes.
And while we are on this, Garima, have you covered in your presentation the accounting aspect of ESOPs?
No, sir. Accounting aspects are not covered today. Only the taxation aspects are covered.
Because accounting aspect, especially when you're going through a trust under the new accounting standards, is quite complex. There is something like from the paid up capital of the company, you have got to reduce the shares which are held by the trust. There is something like this. And also the question about whether in consolidation of accounts, you have to consolidate the trust also into the company's accounts. These are very important questions.
Okay,
company secretaries need to be aware of this because we tend to veer away from accounting, you know. But in this area at least, we must know the accounting aspect.
That's true, sir.
Okay, that's all. Thank you.
Mr. Bala, there are a lot of things in a chart. You know, would like to take it up now?
Yeah. From the trust to the employees, no additional shares are created.
Yes, that's right.
That is right.
That's not the
And the earlier question, I think I already answered, I think. Because they asked trading permission. There is no trading permission. It's only a in-principle permission is required for the listing. And some question has actually come whether NRC will approve or recommend. I already answered that question also here. NRC will make a recommendation. Board will actually approve. Again, subject to the shareholders' approval. That is another thing. And then I think there is one question. ESOP issued at the price of ₹100 per share, and the same is actually available by the employees at the time of the vesting. Exercise option granted to make price of the share at ₹50 per share. Then what are the options available with the issuer? Discounted the option price or what else? There is a valuation aspect is also being discussed separately, which is actually coming out. So we can wait for that.
Shall I continue?
For private limited company, it is an ordinary resolution. That is what somebody is actually saying here.
Yes. Answer is yes.
Yeah, that is right. Answer is actually yes. That's all. Yeah.
Okay. Now we look at the Companies Act aspects here. The major provisions applicable are Section 62(1)(b) for this, which must be read with Rule 12 of the company, share capital and debenture rules. So Section 62 speaks about the further issue of capital, and ESOP is a way for further issue of capital. Rule 12 speaks about the requirements for the purpose of ESOP. So some points are mentioned here. The ESOP scheme has to be approved by the shareholders by way of passing a special resolution, and in case of a private company, by way of passing an ordinary resolution. ESOPs can be granted only to the eligible employees of the company, which we've already discussed the definition of eligible employees. Now, it is important to note that we need to pass two separate resolutions in case the ESOPs are granted to the employees of the subsidiary company or of the holding company. So there cannot be the grants cannot be done within the options cannot be granted within a single resolution. Also, for the when the options are granted to the identified employees within a period who hold beyond 1% of the paid up capital of the company, then also we need to pass a separate resolution. Now, these are the points that are mentioned that are to be mentioned in the explanatory statement at the while obtaining the approval of the shareholders. Some of them are the total number of stock options that are to be granted, the identification of the class of employees, the appraisal process, the requirements of vesting along with the period of vesting, the exercise price, the exercise period, the lock-in period, the maximum number of options. So I think somebody had asked about the lock-in period, if there can be a lock-in period. The company, if it wishes to, they can opt for, introducing a lock-in period in the scheme. Further, certain points are as follows. For the method which the company will use.
Just a 1 minute, Garima. Alok bhai, how does it work? Like, so as an employee, I've been granted, some shares. Can a company say, look, you cannot sell these shares for another 3 years? So I've been granted a share, or I bought the shares after 3 years. And now we are also making a lock-in, okay, look, there'll be another 3 years, lock-in. So you can sell it in the year, 7 year only. I don't know.
So, sir, basically that will depend on the scheme. If the scheme, in the scheme, we have mentioned that those shares which will be coming to the employees after the vesting and exercise of the options, then and then further lock-in period of 1 year, 2 years, or 3 years, whatever, depends on the scheme. So then that will be effective in that particular case. Generally, we have seen a lock-in of 1 year. Otherwise, it may happen vice versa also. Means those shares can be vested to the employees after 1 year, and then in that case, there is a possibility those lock-in may not be applicable. So either company restricts for vesting of the shares after 1 or 2 or 3 years, or they can restrict for the lock-in period, or both can also be possible. So that will depend on the scheme to scheme.
Yeah, absolutely, you're right. Actually, it will depend upon the scheme, because unfortunately, law doesn't say what should be the maximum period of the lock-in. Law only talks about the minimum period of lock-in. If you are actually putting it, it cannot be 3 months and 6 months. Yeah, lock-in, if you are introducing it to be 1 year, and the maximum period is not mentioned at all. It is up to the company to do. As Alok points out correctly, I also seen what many companies do. Instead of giving a vesting period of 1 year, they give the vesting period 2 years with no lock-in period. Some of the companies, they put the vesting period of 1 year, lock-in period of 1 year. That is one. That means the 1 year period, the person can actually get the share and he can hold the share.
And so one more thing, there can be possibility the vesting can be in the portions. Maybe suppose if you are entitled for 1,000 shares, 25% may be entitled in the first year, balance 25% in the next year, and the remaining 50% in the third year. So that can also be possible. So it depends. I think the similar scheme we have in our transition, that vesting will be in the first year 25%, second year 25%, and the last year 50% of all your vesting rights what you are having. And then this number of shares obviously can also be changed depending on your grade and nature of the position what you are having. So everything you have to mention clearly well in advance in the scheme itself, and then take the approval from the NRC board and shareholders.
So the one question is there actually, what can be the maximum period of lock-in that we discussed actually. There is no mention about the maximum the lock, but a minimum period is actually there. And second thing is, all such shares with the differential rights. No, shares will be with the same rights. It will not be a differential rights. And in trust route, at what stage the shares are actually allotted to the trust, or the shares from the trust to employees actually transferred in offline mode or any other mechanism provided in the regulation.
So now the share has been transferred to the directly demat account of the employees after adjusting those taxation or whatever the applicable on.
The first question at the trust route, to what stage the shares are allotted to the trust?
Hello, sorry, sir.
At what stage the shares are allotted to the trust? That is the question.
So that if directly at the time of the scheme implementation only we can allot the shares, and then based on the whenever the vesting will become, and then accordingly it will be transferred to the employees. In case of the secondary market purchase, trust can buy from the secondary market depending on the requirement of the vesting which will be coming in the next 1 year period. They can buy slowly and slowly from the market itself.
Mohini, can I put unreasonable restrictions during in the scheme? I can say, look, first year I'll give you only 10%, second year I'll give you only 10%. So this way I can take the employee for another 15-20 years, and just to show him the banana that look, I don't know, whether it works or not.
Sir, it entirely depends upon the policy and the motive and the management perception that why they are coming out with an ESOP. So, but yeah, you are very much correct. It's not, should not be a carrot which has been hung, but nobody can take it up. So 10% if you're giving, it will normally take 10 years to reap that benefit. So either the company is coming out with the good numbers and every year they are coming with a grant, then every year I have a very good bucket of ESOPs available with me. Otherwise the purpose gets failed. Na? 10% doesn't let me motivated to remain with the company. I get a good jump. I can bargain on a 10% a very easily on that. So definitely it's not a reasonable one. Now a practice, sir, it's 3 to 4 years is a very reasonable vesting period. And every company is generally be keeping maximum to maximum up to 5. Nothing more beyond that.
I have seen 1 to 3 years only. I have seen. I think maybe you are saying 5 years. I have not seen it. But my experiences, I have seen between 1 year to 3 years.
3 to 4 is a very reasonable amount. Maximum the companies can stretch it to 5. But going beyond that, it again depends upon the company policy, that how they, what the motive behind is that the company is coming out with that.
But I don't think any company has got so far whatever the things I have seen it. I don't know, unless Atul boy has something.
Yeah, but in Jindal Steel, they have come out with a very good, longer, longer time period of it.
But the price difference was very low. Means the people are getting at 1 rupee, suppose. Then and the market value is, for example, if 700, 800 like that, and then there can be possible. So depends. Sir.
Someone wants to know, please elaborate on what shall be the eligibility of the trust.
So no eligibility, trustees has eligibility. Garima, if you have covered in your slides, then we can show them also.
No, ma'am, that is not
no,
mentioned
that is
here.
not covered actually, but the trustees are actually basically responsible to take care of the interests of the employee. That is the only thing. There is no separate eligibility as such. But
eligibilities are that the trustees are not related to promoter, neither the directors, and neither the KMP. So these 3 categories are completely excluded from becoming a trustee. So other than that, any person can become the trustee of it.
Allah, there are some interesting developments where the share prices have fallen. You see, ESOPs have been issued and you have got the waiting period of 2 years or 3 years. And during this time, COVID comes or something happens and the share prices fall so drastically that they go even below the price at which they were issued to the employees. There is a lot of turmoil then amongst the employees. So some companies, what they have done is, in such a situation, they have made another ESOP issue at a very, very low price, so that on an average, these two things get balanced out. If the earlier issue was made, say, a little bit close to the market price, 50 rupees is the, I'm talking about a listed company. If the price is about, say, 80 and the shares were issued at 60, but then the prices crashed, and the prices came down to 40. So to compensate employees, you cannot compensate them by giving them money or anything like that. But then another issue is made, and which is made at 10 rupees share issued at 15 rupees or something like that.
It's a good gesture from the company, I would say.
Yeah, because the employees become quite restive. You see, you are not allowing us to sell. Because
you're right, because the whole purpose of retaining and attracting the talent, that is where the companies look after, I would say that.
Yes, for 2 years, 3 years, we have just to are locked in, and during those 2 years, we merely see the price coming down.
Sir, in those cases, sir, even the law allows you to reprice the shares of the company,
you can
reprice the options, and come to the today's present price, which they have during the exercise period. So law is also
this is permitted. Repricing is permitted.
Yeah, repricing is permitted in case there is a substantial fall in the price, which makes it unattractive to exercise.
So that means you have to modify the scheme accordingly, and you have to.
Yes,
and go to the shareholders. Go to the shareholders.
Yes, shareholders approval is there, but you can reprice, because for the new scheme also you have to go to the.
You have to go to the shareholders. Yes, absolutely.
So in both the cases.
So can I have a very vague scheme where I say, look, I'll issue a shares at a 30% discount of the market price when exercising the options. Can I have this kind of this thing instead of fixed price?
Exercise price generally not there, because grant is a very generally a date from where we can, from where the employee can see the appreciation in their wealth. So the grant date is the date when the exercise price are generally be fixed. Maximum to maximum, the companies are doing it that because the prices are very much volatile, and there are many other reasons why they are shifting from the grant date to they are shifted to the vesting date. Whatever when it's going to vest to you, at that time they check the price, and on that price they will be giving discounting. But I have not seen any case where the excise price is ultimately be fixed on the excise date only. So it's a kind become an ESPS ki usi time pe you can offer and you can then they can get the discount of it.
But sir, it
Yeah,
is
Alok,
practical.
sir, yeah.
But it is practically possible. I think in our case, we are getting the shares at 1 rupee only. That is at paid up value. Although the market value is 700 rupees.
Okay.
So that is a discount. Amazing. You are saying 30%. Rate is 200 times percent. Paid up value is 1 rupees, and the JSW offered it at 1 rupee only.
Oh,
And currently the rate is 688. Even more.
There's a question has come up. If a trust is allotted the share, will the trust will have the voting rights?
Just don't have any voting right. In the listed company, it's very clearly written. Trustees can't vote on the shares they hold in the trust. Once they are being transferred to the employees can go and vote on those shares.
Can the company put a restriction that the employee leaves the company within X years, the lock-in period, he will have to surrender the share back to the company?
No, not clear, not clear. The question is not clear.
No, if the company can put a restriction in the scheme, if the employee leaves the company within certain number of years, that means during the lock-in period or something like that, because after the share is allotted, lock-in period is there 2 years, 3 years, during that time he leaves. Can the company put a condition that he has to surrender back the share to the company?
Yeah, these kind of preliminary provisions are there in the few schemes because you are offering them at a very discounted price, and your motive is to retain that person. He has got the shares and then he leaves. So there are nowadays the companies are coming out with these kinds of things that if you leave before a certain number of years after your exercise, you have to give back the shares to the company.
Also, the vesting period is relaxed for employees who are getting superannuation. Yeah, you can have the schemes built in, whatever it is, up to the company to build the scheme, whatever they want it. There is no things in this. Law doesn't prohibit anything.
Correct, Bal.
Can representative of the company be a trustee of trust?
Yeah, company can be.
Yeah, it can be so long as they are not having a substantial holding, etc. in the company, etc. subject to those eligibility, they can be. There is no problem. In many companies, people are actually appointed as the trustees.
Yeah, so there are many organizations who are working like Axis Bank, Axis trustees are the trustees who are acting as the trustee.
Yeah, that is true. Whether there will be a difference between the issued capital and the paid up capital if the shares are under ESOP schemes are allotted?
So no, sir. I think if immediately after the scheme will be implemented, then those shares will be allotted to the trust. So there will not be any difference. And if it is happening through the secondary market, then obviously the trust will buy from the secondary market. Sir.
So to add in this, Alok sir, the companies can, because your excise price, once your excise price is available when you are granting, you can at the time of when you are granting simultaneously you can issue the shares to the trust, and even at the time of vesting. Important point here is that when any employee comes in exercise, the trust have the shares to honor that exercise. So before that, the trust have the shares either it through secondary market or either through the fresh allotment.
But Bala, for the purpose of presentation in the balance sheet, the shares that are held by the trust under the new accounting standards are required to be deducted from the paid up share capital.
In case, yes, if they hold and the company has financed from their side.
Yes, correct. If it is pursuant to a loan given by the company to the trust, and on the balance sheet date, the shares, some quantum of shares is held by the trust, those shares in the balance sheet for presentation purposes have to be deducted from the paid up share capital.
Right. It's kind of a treasury share, sir. Earlier, yes, as the treasury share accounting.
Correct. And I don't know the answer to this, whether the accounts of the trust need to be consolidated with the company.
Yes, it should be, because the service of the services are being rendered by the employee to the company. So it's a kind of an extension arm of the company itself.
Yes, I think they are.
Yeah, they are there.
I think they are.
What about the option lapsed?
So
What about
options, the shares and options both are different. Shares are actual in existence. Options are notional. So option get lapsed, it's fine. It came back to the pool, you can offer to someone else. Shares are in existence. So there is no match between the shares and the options.
Whether authorized capital is required to be increased to issue ESOP? Yeah, of course that is. Because if the authorized capital is not enough to accommodate, it is required to be increased. What happens if market price of the company is below the face value? How the exercise price can be determined? That is what we discuss at large now. What happens? The company can give a ESOP discount provided the profit or loss account is debited every year, end of the by the discount amount. That is the opinion which is expressed. Yeah. Yeah, go ahead, Garima.
Yeah. Garima, I think we should slightly.
Sure, sir. Okay. Okay, these are further more points that are to be mentioned in the explanatory statement, which is annexed to the general meetings notice, which should mention the conditions under which the option vested in the employee may lapse, that is in case of misconduct or termination of employment, or the time period, or the specified time period within which the employee shall exercise the vested option in case of the proposed termination, a statement that the company will comply with the accounting standards, and the exercise, and usually the exercise price is at the will of the company. Now comes the board report disclosure. Some of the board report disclosures are the options that are to be granted, options granted, the options vested, the options that are exercised by the employees, the total number of shares that will be arising out as a result of exercise of options, the options that have lapsed, the exercise of options, variation of terms of options, if any. These are some of them, to list a few. Now, variation in terms of ESOP. Variation on terms of ESOP can be done only by way of passing a special resolution, and such variation shall not be prejudicial to the interest of the option holders. Also, variation can only be done in relation to just a minute. Yes, I'll just start over again. The company will may by special resolution vary the terms of ESOP not yet exercised by the employees, and the variation shall not be prejudicial to the interest of the option holders. The notice of passing such special resolution has to give full disclosure of the variation and the reason for such variation. Now we can see at the miscellaneous provisions of the Companies Act, that is, there has to be a minimum period of 1 year between the grant and vesting of option. The company may have the freedom to, the company has the freedom to determine the lock-in period. The employees will have the right to receive dividend and vote only after exercising of such options. So before, unless and until the options are exercised, they do not have any right to vote or receive dividend. These options cannot be transferred, as we've already seen. The options cannot be pledged, hypothecated, or disposed of in any manner, except in any manner. In case an employee suffers a permanent incapacity while in employment, the options granted to him as on the date of permanent incapacitation shall vest in his legal heirs. Shall vest in him on that date. In the event of death of an employee while in employment, the options granted to him shall vest in his legal heirs or the nominees of the deceased employee. In case of resignation or termination, all the options that have not yet vested shall lapse. However, the employee can exercise the options granted to him which are vested within the period specified in this behalf.
There's one question has been asked here. This is SEBI share-based regulation states that trust should hold the shares at least 6 months before the transfer to the employees. So how can the share be bought from the market just before vesting?
So in case of secondary acquisition, yes, you have to take care of this 6 months cooling period. So it's on the FIFO basis. So whatever you are transferring it today, that inventory should be 6 months old.
So that means trust will always hold some shares with them. As soon as the shares are issued, they'll have to get it replenished with them to fulfill this.
Right. In the secondary market acquisition case.
Yeah. When we consolidate the trust account, paid up capital will automatically reduce. So if we reduce the paid up capital, will it not amount to the reduction of the capital twice?
It's only for the, yeah.
No, please go ahead. Please go ahead.
Sir, yeah, please, sir, please add.
What I think is that the regulations, or rather the standards, require this deduction to be shown. It is not to be deducted twice, but it should be mentioned and not just lost in the consolidation. It needs to be mentioned on the face of the balance sheet or in the share capital part of the balance sheet. I think that's what the position is. Maybe Mohini might know better.
Yes, sir, you are very much correct. It's only the presentation.
Presentation.
Not
yes.
The deduction.
Definitely not
Shares
deduction.
still are there. Yeah, shares are still there.
Okay. Move ahead, Garima.
Okay, sir. Now, certain other disclosures in case of listed company that are applicable. These are certain disclosure requirements in case of CG report, that is on the remuneration policy of the company. The remuneration policy shall provide the criteria for determining the qualification, positive attributes, and independence of the directors, the policy on remuneration for directors, KMP, and other employees, and the details of employee stock option scheme. So any of these details, any details that pertain to it has to be disclosed in the corporate governance report. Also, this policy is directed towards the compensation philosophy. It exactly strikes a balance between the fixed and the incentive pay, which reflects the short-term and the long-term position of the short-term and long-term performance objectives appropriate to working of the company and its goals.
Now coming, the remuneration policy is required to be displayed at the website of the company.
Yes, sir. It has to be displayed on the website of the company. Now, moving forward to the compliances under the SEBI share-based employee benefit and sweat equity regulations. So these regulations mandate the constitution of compensation committee, which is similar, and the composition of such committee similar to that mentioned to the nomination and remuneration committee's constitution as mentioned under the regulation 19 of the SEBI LODR. So the company has to constitute a compensation committee. Such compensation committee has to be of minimum 3 members. All the directors have to be non-executive directors, of which at least 2/3 shall be independent directors.
I have one question, Garima, here.
Yeah.
When the companies are already having a nomination and a remuneration committee,
yes,
is the compensation committee is required to be constituted separately, or the same committee can deal with it?
In my opinion, sir, the same committee can function as compensation committee.
Yeah, that is what I also think.
Yes,
sir, NRC can function as a for this one. Otherwise, I mean, in few companies they have also constituted another committee.
Yes,
but NRC is permitted.
Because what happens is, I recall Sailesh Bhai also will be knowing it in his old time of Tatas. When we had about 50 years back, when these regulations were not there and other thing, and not because this company being a UK-based company, they actually constituted the compensation committee. The compensation committee used to actually go through and fix up the salary and the incentives, etc., for the managing directors and also the senior management level. When the company has come in the listing, when they brought out these regulations, the remuneration committee, what we have done is we simply renamed the compensation committee as the remuneration committee. So here also, I think the remuneration and the nomination remuneration committee can deal. There is no need to have separate compensation committee unless the company decide to have separately to deal on this matter. Yeah,
correct, sir. Only thing we need to then amend the terms of reference of the nomination and remuneration committee. It has to include those other additional terms as well.
Correct, you're right. The terms of reference is required to be amended. Yeah.
Okay. Also, the chairperson of the listed entity cannot chair such a committee. Now, certificate from auditors. In case of every company, this is applicable to listed companies, of course, since these are SEBI SBB regulations. So every company which has passed a resolution for the scheme under these regulations, the board of directors have to, at each AGM, place before the shareholders a certificate from secretarial auditors of the company that the scheme has been implemented in accordance with the regulations and in accordance with the resolution of the company obtained in the general meeting.
Here
the terms and conditions.
Here the secretarial auditor has been given a much higher responsibility. The secretarial auditor has to actually get into the scheme details, etc., and the compliance aspect of it, because there's a certification which is actually involved here. So here actually exhibit our professional excellency here. Yeah. Yeah,
Yes,
go
sir.
ahead. Yeah.
Yes, sir. Okay, the terms and conditions of the scheme. The compensation committee has to formulate the detailed terms and conditions of the scheme, which shall include the provisions specified in Part 1 of Part B of Schedule 1. These shall include the quantum of options per employee and in aggregate under the scheme, the conditions under which the employees may vest in employees or may lapse in case of misconduct or termination, the exercise period, the time period, the rights of employees to exercise these options. Also, there has to be a procedure for making fair and reasonable adjustment in case of corporate actions such as rights issue, bonus issue, mergers, sale of division, and others.
There is a question has been put. Can an ESOP be given to the compliance officer of the company? Of course, he is also a permanent employee of the company. There is no prohibition on that. Yeah, go ahead.
Okay, sir. Just a minute, sir. Now coming to the valuation part, the valuation methods can be adopted as either the intrinsic value or the fair value method. Fair value method is something that is usually adopted by the listed companies. The listed companies usually choose the Black-Scholes method because it considers because it takes into consideration the exercise price of the options, the life of the option, the current price of the underlying shares, and it is a very detailed way of pricing. The other way of of valuation is also the binomial model, and the third can be the intrinsic value of the shares, or the intrinsic value method. So what is intrinsic value? Intrinsic value is the difference between the quoted market price and the exercise price. We've put in an example here. So you can see an option with an exercise price of rupees 100 on the equity share, whose current quoted market price is 125, has an intrinsic value of 25 per share as on the date of its valuation. So the option has been offered for a value of rupees 100. The quoted market price on the stock exchange is 125. Now the difference between the two, that is rupees 25, will be the intrinsic value, which will be taxed.
I want to add here in the Garima, just go back
Yes,
to the
yes.
So add here with the Garima is that this valuation which Garima is talking about, the intrinsic and fair value. So these are the method for valuing for the accounting. This valuation methodology is for the accounting. So fair value is required to be done by every company who is following the Ind AS. So every Ind AS company has to value its option on the fair value, which Garima is very rightly said, it's on the Black-Scholes. It's a very acceptable method of methodology for going for the grant valuation. And intrinsic value are for those companies who have not adopted it in the Ind AS. So these valuation is with respect to the accounting, and this is to be done on the grant date itself. And I think sir is asking for the accounting part. So in this, from here the accounting starts, and it will be accounted for during the vesting period. So here we can start with. Yeah, Garima, next slide.
Yes, ma'am. Now we'll look at certain aspects of ESOP as managerial remuneration. Firstly, we need to understand what is remuneration. Okay. So as per section 2, subsection 78, remuneration means any money given or its equivalent given or passed to the personnel for services rendered by him, and includes perquisites as defined under the Income Tax Act. So any money in any form that has been given to an employee for the services provided by him is remuneration. Now, at the stage of vesting, the employee gets the right to exercise the options granted to him to get the allotment of securities of the option. He may or may not exercise these options. If he does not, then no securities are allotted to him, and nothing is given or passed to him under section 278 of the Act. Now, Schedule 5 of SEBI LODR regulation requires some disclosures to be made in the corporate governance report part of the board's report relating to managerial remuneration, such as the elements of remuneration package, such as salary, the benefits, the bonuses, the stock options, pensions of all of the directors, the stock option details, and whether the same has been issued at a discount, as well as the period over which accrued and over which it is exercisable. Okay. So we can actually conclude that ESOP is indeed a part of remuneration. It is a way of remunerating the employees of the company, the senior management specifically of the company. Now we'll see ESOPs as managerial remuneration. Companies offering ESOP plans are becoming famous these days, especially in case of startups. It has significantly, the trend has recently started, and the purpose of such startups offering ESOP is because they are not able to pay such higher compensation to the employees of the company and at the initial stage, because there is a cash crunch in the company. So the purpose is also to conserve and invest the cash in operations on are its priorities. Ma'am, what are your views on this?
Yes, definitely, because only the payment of the remuneration, which is the standard way of like giving them the cash, any perquisite. ESOPs definitely it's a kind of a over and above. You can say that definitely nowadays ESOPs all professional MDs are generally be having the ESOPs in their kitty if the company have the policy, and because ultimately it's only the growth. And one more thing to add, not only the private sectors have accepted this ESOPs as a remuneration for the senior people. If you go about the RBI circular as well, so RBI circular has mandated for every bank which is not a public sector bank, they have their ESOPs as a mandatory part of the variable pay of all the executive MD, directors, and there are a few people in the banks are market risk takers. For them, the ESOPs are mandatory to be a part of variable pay. So there is a 50-60% part of the variable pay has to be paid in the form of an ESOP. So it's not that ESOP only the wealth creation, it's the ownership. And it's a kind of that what you are doing, if something gets wrong, your variable pay is linked to the value of the bank also. So it's not only recognized in the private sector, government is also recognizing the ESOPs as a part of their managerial remuneration.
One question has come here actually. Can ESOP trust to be given a loan in excess of 5% of the paid up capital and free reserve, especially when the startups will not have sufficient balance?
The startup, it's for the private limited company. This rule is not there. It's for all the public companies, public unlisted and public listed. This 5% rule is there. And for those companies which have the corporate as a shareholder, in those cases this 5% limit is there. Otherwise, no. So it's section 67(3) subsection 3 you have to take care of in that case.
See, Mohini, the big challenge for a startup, of course, we are discussing on the slides where, we are saying that, look, startup cannot afford to pay, and that is why the ESOP. Now, but at the same time, if I'm issuing the shares, so I'm also sharing my ownership, right? I mean, so at the startup level, my valuation is so low. I mean, because even if I have to pay some 20-30 lakhs, so probably I'm sharing something like a 20-30%. I mean, so how do we? I mean, so how the startup the promoters can save his ownership?
Sir, in those cases, when the valuation is low, yes, definitely the percentage of ESOPs in the company is high. Many a time, the CEO or CTOs with joining the company at a very initial stage, they have a very good stake of 5%, 6%, even the 10% stake in the company. So you are sharing the value, and it's not that upfront you can give the ESOPs. You can maintain that percentage for all time. So even in the future years, when your company is expanding the capital, at that time also more ESOPs can be issued to them. So they can be compensated in this kind of a form. Ultimately, the value it is to be redeemed. That's the main crux of giving the ESOPs to them.
Salish bhai, you understood my question, right? So at a startup level, my valuation is so low, and if I have to hire somebody CFO at in my company, and if I have to pay some 30-40 lakh salary, which is also not a very big amount, but for a startup company, like paying some 40-50 lakhs to CFO or to CTO, technology officer, I mean that's a very huge. So
Correct.
yeah, so I don't know. I mean, so unless and until if I show or showcase that, look, this is going to be the future, and I make a story like this, Yeah.
Only so you need to sell your ESOPs.
Acha, okay.
You have to sell your ESOPs to your employees, because ultimately for the employees and even it's for the enlisted companies, it's a piece of a paper until and unless it get ready. You give me these ESOPs and you say me, ki, okay, Mohini, you have to keep it. One day I get listed, you get the value of it. So what is it now?
Only thing, Mohini, in this situation, see, there could be perquisite tax payable because of the price, the valuation is low and you're giving, etc. There could be perquisite tax which the employee has to pay without getting any remuneration. That means am I wrong here?
Yes, sir. I hear the perquisites are sir, at the time of grant, no tax on the employee.
Correct.
At the time of vesting, no tax. Only when employee exercises. So
only when he
exercise, exercise, that means after 5 years, after 2 years, 3 years, 4 years, or when that exit event comes in the company. Only at that time the employee is exercising, and at that time only he is paying the perquisite tax. So
Garima is putting up a slide to the text.
Yeah, okay. I think taxation is
okay, then let's go ahead. Please, let's go ahead.
Okay.
I may be entirely wrong.
You can't be wrong, silent boy. How can you be wrong?
No. Come on, Bala.
Okay. Now the question arises whether the employee should be accepting ESOPs as a part of salary. Okay. So so as we have seen, the ESOP, it sets up a contract between the company and an employee that will allow the employees to acquire shares at a decided time and price. So the employee can potentially grow his wealth at the time of listing, specifically where we can see in case of the startups we've already seen, it has potentially increased the wealth of the employees here. So obviously it creates wealth for the employees. If you are getting stock options as a part of annual remuneration, it can be a source of sustained wealth creation. It can even compensate for a sub-marketary salary if you're joining at an early stage company and getting a strong equity component. The major benefit is that if the company executes a buyback of ESOP or launches an IPO, this makes ESOP a great tool for building the wealth. ESOP as managerial remuneration, certain examples which we've already discussed are like that of Nykaa. In Nykaa's case, the company had already allotted over 6,000 shares to its employees, including its CFO and the AVP and all the senior managerial personnel. 197 Communication, which is the parent company of Paytm, had recently granted ESOPs worth 222 crores to its employees. Some other examples of it are Zomato, Delivery, to name a few. Now, examples of ESOP offering, these are the regular companies that have offered ESOP, such as Amul, Havells, Jindal Steel and Power, Mother Dairy, L&T, and Just Dial. Okay, so sir, as sir had mentioned regarding ESOP stock purchase plan, Havells and Jindal Steel and Power have gone for ESPP. Other examples are Yahoo, Wipro, Kotak, and Kotak Mahindra Bank and Naukri.com. For Yahoo and Wipro had opted for restricted stock units, whereas the Kotak and Kotak Mahindra Bank and Naukri.com had opted for stock appreciation rights. The startups that have ESOPs in place. So as we already know that majority of the startups today, they do offer ESOP. So this is a chart regarding that. Approximately 62.3% of the companies, they already have ESOPs in place. It is just a percentage of 37.7% who do not yet have ESOPs in place. Now coming to the taxability of ESOPs, as sir was asking regarding the perquisites.
Garima, can you just go to the previous slide and just repeat again? There was some disturbance. Yeah.
Sure, sir. So as we've already discussed regarding the increasing trend of ESOPs in the startups, we can see here that 62.3% of the startups already have ESOPs in place. 37.7% of the companies that are startups do not yet have ESOPs in place. So we can see an increasing trend of introducing the concept of ESOPs in the startup companies. Now the taxability of ESOPs. Firstly, we need to understand what are perquisites. Perquisites, as per the Income Tax Act, refers to the value of any specified security that are allotted or transferred directly or indirectly by the employer or of the former employer, free of cost or at a concessional rate to the assessee. So the perquisite, what will be perquisite is assuming the share value of a stock is rupees 100. In the market value of a stock is rupees 100, which is being offered at rupees 10. Here the perquisite value of perquisite will be rupees 90. So perquisite can be understood as the difference between the FMV on the date of exercise of options and exercise price paid by the employee. We also need to understand here the definition of remuneration in conjunction with the definition of perquisite. When we see it together, it is very much clear that money or its equivalent that is given when the shares are allotted, given or passed only on the date when the securities are allotted by the company to the concerned employee pursuant to exercise of ESOPs by him. The perquisites will only arise when the ESOPs are exercised by the concerned employee, whereby the company allots the securities to the employee and the perquisite is effectively given and passed on to such person as required under Section 17 of the Income Tax Act.
Which means, it's very simple, unless until the ownership passes on in the hands of the employee, that means he received the securities in his hand, then only the taxability arises. Until then, there is no taxability arises.
Garima, do you know when this amendment was brought about in the Income Tax Act? I've got something to say if you know.
Regarding what amendment, sir?
This about will arise on this ESOPs amendment. Obviously, it was not there in the first act.
Sir, it was way back when the FBT. Earlier, it is a part of a fringe benefit. So fringe benefit, it get abolished, and at that time, this taxability of ESOPs at the time of exercise come in this income tax.
So at that time, the Infosys, the HDFCs, and the Larsen and Toubros had already done its first ESOP scheme, I think.
Right. So
yeah, you're right. You're right. You're right.
And therefore, look at the benefit they got. You see, they were not charged perquisite tax because this was not there. Then they got the shares, they held them, and they sold them after 1 year or 2 years. So it was capital gains, but it became long-term capital gains. And at that time, there was no tax on long-term capital gains.
Okay,
so these early guys of Infosys, HDFC, Larsen and Toubro have paid no tax at all. Am I right, Bala?
You're absolutely right, Senate, because regulator has been waiting how to get money from these people. So they find out another. They found out another avenue. They started taxing it.
And the Tatas were just sitting behind doing nothing. Really, I tell you, the early bird catches the worm is very correct here. All these people who have got Infosys, HDFC, Larsen and Toubro, I know these surely. The early guys have paid zero tax because there was no perquisite tax. This amendment had not come. They held the shares for 2 years. They were quite rich enough to hold the shares. There was no immediate need of money. And after 2 years, it became long-term cap. I don't know, 2 years or 1 year. It became long-term capital gains, no tax.
Yes.
At that time, long-term capital gains had zero tax. Now it has.
Yeah.
It has.
Yeah.
Now it has. Now it has. That time there was no tax on long-term capital.
Yeah.
So just look at the and also 1 minute and also the accounting at that point of time, Bala, was not to debit it to P&L account as human resource expenditure. It was straight away debited to general reserves. Therefore, there was no impact on P&L account. Straight away it went into reserves. Your profit was not shown lower to that extent. Now it is. Today there is a debit to the P&L account. So those times before these regulations came in, people have made a killing.
So that's why income tax has also gotten hold of it. They know that.
Yeah.
Right?
But they've done it legally, yeah.
Legally, sir, because
legally, absolutely legally. There's nothing wrong in what they've done. But it's a killing.
It's a killing. But sir, important is because employee is paying a tax over it. So someone has to get the reduction of it. So that's the reason it has been taken as the allowable expense in the P&L of the companies.
Yeah,
as
correct.
a ESOP, because it's a
But at
purpose
that time,
ultimately. It's a
the initial
FBT
days-
partner, sir. So it's a
Pardon?
part of an FBT. Fringe benefit tax. It was a part of fringe benefit tax at that time.
I don't recollect, but I know that these people haven't paid any tax on this.
There might be company has paid it out.
No,
That-
fringe benefit tax is paid by the company.
Yeah. So at that time, company has
At
paid
that
it.
time, company has to pay the tax on the fringe
Acha.
benefits, not by the employee.
Now the employee has to pay it over.
Now the employee has to pay as a perquisite.
As
Right.
per with the tax.
Now, Mohini, see, we had this, initially the slides on a NICA, where, we said, somebody got, 250 crores, as a ESOP. Now tell me, now how he'll pay the tax? Yeah, I mean,
Correct,
so
correct.
even if I say, 250 crores ka ESOP and he has to pay some 50 crores also. Now, bichare ke paas, I'm sure, that CFO, I know him personally. He doesn't have those 50 crores, 60 crores to pay the tax.
They have got the financing from good financial institutions for that.
Acha, there is a finance company.
Financing companies are there. There are every bank, generally now the bank has the lending for the ESOP. ESOP
Acha.
share, exercising the
Oh.
ESOP share.
Against the security of the shares, Mohini?
Against the security of
Yeah,
the
yeah,
share.
against the security of the share.
Against the security of the share.
So in case of JSW also we had similar scheme earlier. So Edelweiss has helped us that time.
Edelweiss, right.
So I mean you can have the tie-up with any of those ones.
There's a question has come up. Initially, capital of startup is very low. How can I give ESOP in an attractive size?
Size doesn't matter, amount matters.
Then the
The
next is,
ESOP is a value.
yeah. Then the next is fair market value calculated as per the index or market value of the listed company.
ESOPs, there is the difference between deciding the exercise price and the accounting part. Definitely, exercise price is going to play a major role when you are going for the accounting. But these are the two different. So exercise price, you are free to decide. So you can take the base of the market one day before the market price in the listed company as a base price, and you can go for the discounting over that. Even you go up to the face value, like Alok sir has said that in their company they have got a ESOP at a face value itself. So you are free to decide for that. But in the accounting part, you have to consider this difference and as well as the other fair value components like volatility, risk-free, and dividend. And then the accounting will be done. So these are the two different things.
Prasad Devkar has put up only something is the financial year 2013. I don't follow. Prasad, are you there? What is exactly your question? Prasad?
Yes, sir. Means accordingly, the fringe benefit tax was abolished in 2013, I guess 12 or 13. And from this, the perquisite tax was imposed on the employees.
Okay. You are answering the question to Shailesh Bhai. Which year? Shailesh Bhai, perquisite tax came into force in 2003. Fringe benefit has been abolished.
Prior to that, what was there? Fringe benefit tax.
Fringe benefit tax, which was payable by the company. Yeah. What if there is a conflict between Indes and company side? I don't follow the question here. Shruti, what exactly the question here? Because we are talking about accounting policies which are framed in line with the company side, which is allowed to follow. And second thing is we are talking of the income tax. Now your question says actually Indes and company side. What exactly is in your mind? Shruti, can you speak?
I think Shruti, in the Companies Act itself and even in the SEBI, both they have mentioned in their ESOP rules that you have to follow the relevant accounting standards. So relevant accounting standard comes from that index or the intrinsic. So if intrinsic index you are following, you have to follow the fair value. If not, then you have to follow the normal intrinsic value method. So I think there is no conflict per se between the index and the companies.
Can ESOP be cancelled? Any restricted grounds?
Cancellation is a variation, so you have to take care of it. That's how.
What is the difference between the ESOP and the RSUs?
ESOP and?
RSUs. Restricted stock units.
I take a Garima?
Yeah.
Yes,
sure.
sir. Yes, ma'am.
Okay. So ESOPs are the employee stock options and RSUs are the restricted stock units. In India, the RSUs and ESOPs per se has basically no difference. We are differentiating in India in ESOPs and RSU on the basis of the motive behind giving these things. ESOPs are generally be linked with the fair market value, and the ESOPs are generally be given at a very discounted price and at the face value. ESOPs are generally be stretched over the vesting period like 1, 2, 3, 4 years. RSUs are linked with the either the loyalty or it will be the project based. So performance RSUs. So once you complete that performance or once you complete that tenure, immediately it be credited in your immediately it get vested as per the Indian. So in the ESOPs and RSU, ESOPs are generally employees is be given for a longer time period, and you can have a various permutation and combination, and RSUs are being given to the very restrictive people at a discounted price of face value, and immediately it be credited once that condition is fulfilled. So this is a basic difference between ESOP and RSU.
One question is coming up: whether option can be lapsed if not exercised during the exercise period?
After. Once your exercise period is over, it gets lapsed, yes?
Yeah, it is there. What is that another one somebody is putting? Fringe benefit tax paid by the companies were added to the income of the employee for calculating the tax liabilities. I'm not sure on this actually. A small distinction between the ESOP versus certificate in India perspective as versus global standards.
Sweat equity. It's a very different. ESOPs and sweat are very different. These are the two different kinds of mode of giving the equity to the employees. Sweat is generally be given for the very few and generally to those people who are where the sweat can be valued.
Correct.
The valuation is to be done, and against those valuations you have to give the sweat equity.
Yes, Garima, proceed.
Ma'am, yeah. Okay, so there are two aspects of taxability in the entire process. So an employee is taxed in two stages: at the time of exercise of option and at the time of sale of shares. So at the time of exercise of options, at the time of allotment of shares on the exercise date, the difference between the fair market value as on the date of as on the exercise date and the amount that the employee have paid for the exercise of subscription to the shares is calculated and taxed accordingly. This taxable value is called the perquisite value. The perquisite value shall be taxed as per the income tax slab rate applicable to each employee. Now, there's an example given here. Employee exercised his options for ₹50 only. The market price for such options is ₹150. Here he has made a profit of ₹100. So ₹100 will be considered as perquisite, and this ₹100 will be taxable as per the slab rate applicable to the employee. Now discussing the taxability at the time of sale of shares. So when an employee sells his shares, either he will incur short-term capital gain or long-term capital gain, which will depend on the period of holding of shares of the company. So firstly, let us see a basic example of capital gains here. Here, the sale price was ₹400 and FMV was ₹150. The capital gains that have arisen out of it was ₹250. Now, these 250 will be taxable depending on whether it is a short-term capital gain or a long-term capital gain.
So the point here is, originally the share is only ₹50, but at the time of the exercise, the fair market value is 150. So the 100 has been already taxed on the perquisites. Now, when it's come to the capital gains, it is not from 50, it is from 150. So 400 minus 2, 150, because that 100 is already taken care of. So balance is actually whatever is there taken care of, that is actually tax here capital gain.
Alok sir, would you like to add anything to it?
So basically, I agree with Mr. Bala that the amount what we have already, the perquisite up to which the perquisite tax has been paid, that has to be considered for the FMV. For the acquisition, which is coming to the employee. while computing the capital gain. So, I mean, the example is very clear that although the share price might be 50, we have acquired it at 150. So, difference 100 rupees we paid for the perquisite tax, and the when the comes to the capital gain, the sell price minus this FMV will be considered for the capital gain, and that will depend on the period of holding, which is less than 12 months or more than 12 months. Depending accordingly, it will be taxed as short term or long term.
Correct. So moving ahead, the short term, the tenure of short term, the definition of short term also varies depending on the type of company. If it is a listed company, the short term would mean if the shares held for a period of less than or equal to 12 months. In case of an unlisted entity, it would refer to shares held for a period of less than or equal to 24 months. Now, in case of listed entity, the short-term capital gain is taxed at a flat concessional rate of 15%. In case of listed entity, the LTCG will be 10% on gain made in excess of rupees 1 lakh. So, for example, if an employee has sold his shares and made a profit or made a gain of rupees 1,50,000, then in that case, this 1 lakh of exemption will be removed and he will be taxed only on 50,000 rupees. Now, in case of an unlisted entity, in the short-term capital gain tax will be paid. Capital gain will be calculated as per the income tax slab rate of the employee, and the long-term capital gain will be taxed at the rate of 20% along with the indexation benefits.
That's one question has come actually, whether an employee will be taxed under the short-term or long-term when the trust is holding more than 1 year in the vesting period. Question does not arise because unless until share allotted, it comes into the hand, then only the taxability starts. So the holding period of trust is no accountability here, because once the shares allotted, then only the question of taxability starts here. Then the next question is, which date should be considered as a calculating perquisite value for listed or unlisted company at the time of exercise, since after the application allotment may take some time. It is only after the allotment of the share, because the ownership has to pass on, it has to come into his hand. So once that security is actually transferred, then only that date will be considered. Yeah. Yes, go ahead, Garima.
Yes, sir. Now, the taxation aspect in case of non-resident employees or resident who is not an ordinary resident, at the time of exercise of options, since the perquisite is accruing in India, the tax shall be payable in India. And in case of sale of shares, if an employee is a non-resident or is not an ordinary resident who has options, then the employee may have to pay tax outside India. That would totally depend on the DTAA understanding that the company has, that the country India has with the other country.
So that means in the different countries, the taxation is involved, then naturally you can take advantage of the double taxation benefit while computing the Indian income tax. To that extent, you will get a relief. Yeah.
Okay, so here is a case law of Dr. Muthian Sithu Sivathanu versus ACIT. Here, the assessing officer had treated the sale proceeds of the shares allotted in case of ESOP during the earlier assessment year when the assessing office assessee was the non-resident as perquisite instead of treating the same as capital gains. So here in this case, the judgment was given that gains arising from the sale of shares allotted in ESOP scheme when the assessee was non-resident is not to be assessed as perquisite instead of capital gains as the stock. The asset was already vested on the assessee during the relevant date. Now this brings us to the conclusion. What we've understood from the entire concept is that ESOP regulations are a little bit complex. Hence, we need to have a proper administration system in place for working towards providing ESOP ownership to the employees.
That means the
ESOP
scheme
obviously is a.
That means the scheme has got to be drawn very clearly, categorically, without any ambiguity. So here probably, the adopting skill of the professional comes into the picture, whoever is there. Especially we being a corporate law experts, we should be able to help. So practicing company secretaries can definitely help in drafting the good scheme. That is actually the underlying thing here. Unless you have the proper scheme is drafted, it is going to be difficult. Yeah. Otherwise, you'll have to end up, variation of the scheme, modifying the scheme, etc. And all those issues will come up. Yeah.
To conclude,
sir, one more thing before you conclude, Garima. I think there was one question asked by Mr. Harish that what date should be considered for calculating perquisite value for listed and unlisted company? Because generally what happens, there can be possibility of that allotment may come to the persons after 1 or 2 days. So generally in the practice, what may happen, as Bala sir has said, previously should be the allotment date. But suppose in case of 3-4 days lapse happen, and there is a possibility, suppose weekends come, we got the application on Thursday or whatever, Friday, and Friday is off. And then, so the date is, we are considering on the day on which we got this exercise, not the allotment. Because the transfer of the share, corporate action may take some time, 3-4 days or whatever. So it should be that date of exercise date.
So it is the exercise date.
Basically, the rate should be considered on the exercise date.
Okay.
Yes.
Okay.
Yes.
And in the case of an unlisted company, how would you do it? Would you do a valuation every time?
Sir, one valuation is valid for a period of 6 months.
6 months. No,
Yeah.
there is some provision like that.
Yeah.
Yeah,
Totally
6
right.
months. Income tax is very clearly said.
Very clear on that, isn't it? You don't have
Yes.
to. You have to do valuations twice a year, right?
Yeah.
Twice a year, and it should be from the merchant banker. They have
Yes, it
recognized
should.
only the merchant banker valuation.
Okay.
Yeah. Move forward.
Okay. So this brings us to the end of our topic. We can only conclude that it is a good opportunity for the companies to attract and retain the employees in the long term. And it also builds a foundation of financial freedom for employees and for retirement. Thank you very much.
Okay, thanks.
Thanks a lot, Garima. Wonderfully, nicely presented. I must appreciate for your nice presentation in capsule forms, everything A to Z. So great thanks to you. I also would like to definitely acknowledge the receipt of the panelist expert, their experiences, their views, etc., especially Alok and Mohini. And in today's, I must say, it is definitely not only a learning experience for me, it also is a learning experience for the other people as well. Definitely, I'm sure this would have benefited to the larger number of the people. Great thanks to all of you.
Thank you.
It was a great learning. Thank you, Balaji. Shailesh bhai also, Alok ji, he's a good friend of mine also, and Garima, our young, team member. Thanks everybody. And I just request you to like all this video we are recording, and this will be uploaded to our YouTube channel. And I'll request you to subscribe this channel and probably make it on so that you get the alerts also regularly. Thank you, everybody. Thanks, Bala sir and Shailesh bhai and Alok ji and Garima and Mohini especially. In a very short period, you just accepted our invitation.
No problem, sir.
Thank you.
And
Thank you
it's
so
great
much to
for
everyone.
me to
Thanks
have
a
a
lot.
part of this.
Thanks a lot to Garima. You maintained the time absolutely. Thanks.
Okay.
Thank
Thank you so much, everyone.
Thank you so
you,
much.
everyone.
Okay,
Thank you.
bye.
Thank you.
Good day to all.